Ladies and gentlemen, good day and welcome to Q2 and H1 FY26 earning conference call of Manorama Industries. As a reminder, all participant line will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and 0 on your touchtone phone. I now hand the conference over to Mr. Hiral Kenya from EY. Thank you, and over to you, sir.
Thank you, Danish. Good evening, everyone. On behalf of Manorama Industries Limited, I welcome you all to the company's Q2 and H1 FY26 conference call. To discuss the performance of the company and to answer your questions, we have with us the management team comprising of Mr. Ashish Saraf, Chairman and Managing Director, Mr. Ashok Jain, CFO, Mrs. Ekta Soni, AVP Investor Relations, and Mr. Deepak Sharma, Company Secretary. Before we proceed this call, I would like to draw your attention to the fact that today's discussion may contain forward-looking statements that are subject to various risks, uncertainties, and other factors, which will be beyond management's control. We kindly request you to bear in mind that there might be uncertainties when interpreting such statements. Please note that this conference is being recorded. We would now start the session with opening remarks from the management team. Afterwards, we will open the floor for an interactive Q&A session. I would now hand over the conference over to Mr. Ashish Saraf for his opening remarks. Thank you, and over to you, sir.
Thank you, Hiral. Good evening, everyone, and a warm welcome to the Manorama Industries Limited earning conference call for Q2 H1 FY26. I am accompanied today on this call by our Director and Chief Financial Officer, Shri Ashok Jain, and other members of our senior management team. I would like to thank all our dear investors, analysts, and stakeholders for joining the call today and for your continued confidence on Manorama. The first half of financial year 26 has been another period of strong performance for Manorama Industries, reaffirming our position as a global leader in specialty fats and butters. Our growth during this period was driven by a superior mix of value-added products, optimized utilization of our expanded fractionation facilities, and consistent demand from leading international clients in the chocolate, confectionery, and cosmetic industrial sectors. We continue to see encouraging traction across our global customer base, supported by our robust sourcing network, strong research and development capabilities, and focus on customized, high-quality solutions. Our emphasis on innovation, sustainability, and value-added products offerings has helped us maintain healthy margins and strengthens our growth trajectory. Based on the strong performance and business momentum, the company has revised its annual guidance for financial year 26 upwards from INR 1,050 crores to INR 1,150 crores plus, reflecting our confidence in the demand outlook and operational scalability. This period also marked notable strategic progress for Manorama. We are now under the process in the next months to upgrade our fractionation facilities, expand our production footprint, and strengthen our presence across key global markets. Our waste to wealth sourcing model continues to empower millions of rural and tribal women, ensuring inclusive growth while reinforcing our environmental social governance commitments. This model not only ensures a reliable and sustainable supply chain, but also aligns with our long-term vision of responsible and traceable sourcing. We have also acquired land adjacent to our existing Birkoni facility to support our upcoming capacity expansion, and we are progressing well with new ventures in West Africa and Latin America to deepen our global footprint. These initiatives collectively position us for our next phase of growth, both in terms of scale and market reach. As part of our operational planning, we have scheduled a plant maintenance and upgradation shutdown in Q3 financial 25 to enhance efficiency and facilitate expansion in our current fractionation capacity from 40,000 metric tons annually to 50,000 metric tons annually approximately. This has been carefully planned and will have no impact on our annual revenue guidance. Instead, it will help us achieve higher productivity and better throughput in the coming quarters. Looking ahead, we remain deeply focused on strengthening our leadership position in specialty fats and butters through continuous innovation, capacity expansion, and deeper customer engagements. Backed by a fundamentally strong balance sheet, disciplined execution, and a sustainability-driven growth model, we are confident of delivering long-term value to all our stakeholders. With that, I will now hand over the call to our Chief Financial Officer and Director, Shri Ashok Jain, to take you through the financial and operational highlights for the quarter and the first half of the year. Thank you, everyone. Ashok.
Thank you, Ashish sir, and good evening, everyone. Let me take you through the financial performance for the second quarter and half year ended 30th September 2025. For H1 financial year 26, Manorama Industries reported consolidated revenue of rupees 612.9 crore rupees, demonstrating a strong 86.4% year-on-year growth. EBITDA for the period stood at rupees 156.6 crore with margin of 27.2%, while profit after tax was rupees 105.5 crore, translating into a margin of 17.2%. The improvement in profitability reflects our focus on product mix optimization, improved capacity utilization, and disciplined cost control measures. For Q2 FY26, revenue stood at rupees 323.3 crore rupees, while EBITDA came at rupees 87.7 crore with a margin of 27.1%. Profit after tax for the quarter was rupees 54.9 crore, reflecting a margin of 17%. This result demonstrates our ability to sustain strong operating performance despite ongoing capacity expansion and seasonality in the business. On the balance sheet front, our financial position remained robust and well capitalized. As of 30th September 25, ROC and ROE stood at 49.9% and 36.9% respectively, with a comfortable net debt to equity ratio is 0.57:1. Working capital management has remained efficient with reduction in working capital days to 97 days. Additionally, net operating cash flow of rupees 189.07 crore during first half FY25-26, ensuring a strong liquidity to fund growth and expansion initiatives. We continue to maintain a disciplined approach to capital allocation. The upcoming capacity expansion of 52,000 metric tons per annum, along with our investment in new geographies such as West Africa, and Latin America are fully aligned with our long-term strategy to diversify and strengthen our global presence. These initiatives will enable us to capture growing demand for cocoa butter equivalent and other specialty fats and butters worldwide. With strong business fundamentals, growing customer relationships, and ongoing operational improvement, we are confident of sustaining our growth momentum and delivering on our revenue guidance for FY25-26. That concludes my remarks. We would now be happy to take our questions. Thank you.
Thank you, sir. Ladies and gentlemen, we'll begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use headset while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. Our first question is from the line of Akhil Parekh from BNK Securities. Please go ahead.
Hi, thanks for the opportunity and many congratulations on such a stellar performance. My first question is, if you can please highlight what has been the contribution of specialty products in the second quarter and first half of this year.
So the contribution from the value-added products is like and steering is around 70 to 75% of our sales. Utilization, it has been around 80 to 85% for our half-year numbers for FY26.
Sorry, can you please repeat? I think your voice was cracking up. I don't know if it's on my side, but I couldn't hear clearly.
Okay. So our value-added product contribution to our sales is around 70 to 75%, which includes cocoa butter equivalent, stearin, and some value-added product out of volumes. Okay. And the plant utilization level for H1, it is around 80 to 85% combined.
80 to 85% on the 40,000 tons, right?
On the 40,000 tons for half year, 6 months, yes.
Okay. Got it. Second, sir alluded for, there he has revised the guidance upward from 1,050 to 1,150 crore. In terms of margins, are we confident that we'll maintain what we have achieved in first half?
So yes, of course. So the performance you have seen is a result of our continued focus on operational efficiency, premiumization initiatives, and disciplined executions. So looking ahead also for the coming quarters, we remain very confident in the structural strength of the business, of the products, and of course the model, and our ability to sustain the healthy margins. So our efforts will continue to be directed towards driving consistent, healthy margins for the company and our shareholders.
Sure. And also, if you can highlight or give more details in terms of what are the new ventures, what sir described or mentioned in West Africa and Latin America. Anything specific if you can.
Yeah. So firstly, we have established subsidiaries in West Africa to streamline and strengthen the procurement of our raw materials like shea nuts, which are a key raw material for our operation. In addition, we also have signed an MOU, the Memorandum of Understanding, with the government of Burkina Faso for setting up a processing facility in the country. So this will enhance local value addition and improve the supply chain efficiency for the raw materials. And if you talk about Latin America, so in Latin America, we have entered into an agreement with Deckel in Brazil to utilize their processing facilities for manufacturing of specialty fats intended for that regional market. So this will allow us to scale up very quickly without immediate capex and address local demand more efficiently. And additionally, also we have signed a memorandum of understanding with the government of Chhattisgarh for potential investment in our future planned capex projects.
So the Africa plan, is it more of a backward integration? Is that understanding correct?
Yes, that understanding is correct. It is more a backward integration project where we are going to set up a processing extraction facility there.
Okay, and for the Latin America, it's more of a product extension.
Yeah, it's for the market penetration. Yes, for our sales. There's we see a huge opportunity there.
Okay, and any capex guidance for this year and for the next year?
So capex, as we have talked about, so we already have made meaningful progress, including the acquisition of around 20 acres of land, and we are still negotiating further. And we are also upgrading our facilities for the existing capacity, which will result in a 30% increase in the current capacity. So that capacity we will take from 40,000 to 52,000 tons. Additionally, for the other projects which we had announced earlier, so the total capital expenditure is estimated at approx 450 crores. So basically all these projects are aimed at expanding our current capacity and enhancing our control over the supply chain and entering a new market and also upgrading the technology for the company.
So just an extension to this, and my last question, the 450 crore will be funded through the internal accruals, and what is the time frame we are looking at basically to expand 450 crore?
Yes, so for the funding, so we are actually in a very advanced discussion and we expect to finalize the structure shortly. We will share the updates on the mode of financing for the project, but we are of course looking to evaluate the options for internal accruals, debt, and also fundraise through equity. So we are evaluating all these three options for our funding this project for 450 crores.
And the time frame for this project?
So in the time frame, we hope to see our project getting on stream in the next 2 years.
Okay, great. This is helpful. Best luck for coming quarters, and wishing happy Diwali to the entire team. Bye.
Thank you. Thank you.
Thank you. Wish you same.
Thank you, sir. Our next question is from the line of Nikhil Kapoor from LIC Mutual Fund. Please go ahead.
Hi, can you hear me?
Very
Hello,
well,
am I audible?
yes.
Yeah, hi,
Yes,
hi,
sir.
ma'am. Hi, sir. Congratulations on a very good set of numbers. Yet another good show there. I just needed one number. Ekta was from the export point of view. What would the export contribution from on our top line?
58% was the export contribution and 42 is the domestic.
Got it. And just the plant upgradation timing, will this be a Q3 or will it be on Q4 scenario?
So it will be around Q3, December onwards.
Got it. Rest of my questions have already been answered. Thanks. Thanks. I'll get back on to
Thank you so much.
Thank you.
Thank you, sir. Our next question is from the line of Jeevan Patwan from Sharsar Capital. Please go ahead.
Yeah, firstly, congratulations to entire team for a wonderful set of numbers. What is striking is basically the improvement in the balance sheet. So our ROC and ROE has moved up pretty smartly. I think this will continue even in the next half and next year. The only one question I have on the balance sheet side, so just want to understand what is this non-current other assets and other financial assets, the two line items. One is non-current other assets and other financial assets. If you can explain, Ashok, for this.
So in other financial assets are covered FDR, which is around 126 crore rupees.
Okay.
And the other non-current assets, this is the advances which we have paid for our coming upgradation of the equipment and packing area which we are going to upgrade. This is the advances paid. And we have this non-financial assets covered 79 crore rupees. And the second line of item, bank balance, other equivalents, and this in total is around 126 crore rupees FDR as on date. Cash FDR.
Perfect. Very good. Perfect. No, that's it. That's it. Congratulations once again and happy Diwali to everyone. Thanks a lot.
Happy Diwali.
Happy Diwali, sir.
Diwali. Yeah.
Thank you, sir. Ladies and gentlemen, please restrict your question to 2 questions per participants. Thank you. Next question is from the line of Binay Shukla from Phillip Capital. Please go ahead.
Thank you for the opportunity. Just one quick question on the top line front. What kind of growth should we expect for 27 and 28, and similarly on EBITDA margin front?
So, hi, thank you, Vinay, for the question. So, for the guidance for our next year, we would, like to reaffirm the numbers in the March quarter. So, during that time, we get the better visibility for the year. But of course, we see a tremendous growth given the capacity we are coming up and the utilization still is, it is there to optimize. So, we see a good growth, but in numbers, we request you to kindly wait for March quarter to revise our guidance for FY27 or 28.
Okay. And just last question on who are your top 3 customers in India and export market, and what will be the revenue contribution?
So the top 3 customers includes Mondelez, Pyro, Nestle, Hershey. These are our top customers.
And what will be the revenue contribution from these 4 clients?
So we have many customers in our portfolio.
So we can share the figures for top 10 customers, which is around 40%. So and top 3 customers are Mondelez, Nestle, and Mars.
Okay. Thank you so much.
Thank you.
Thank you. Our next question is from the line of Amit Agarwal from Kotak Securities. Please go ahead, sir.
Good evening, Mr. J, and good evening, Ekta. Congratulations for a fantastic set of numbers. See, my investors have only one concern. One was like...
your voice is little... hello, sir. Your voice is little low, sir. Hello?
Yeah. See, my question is on the cocoa side. I know we are into cocoa butter equivalent. So my investors have one concern that prices of cocoa have corrected significantly. So does it impact our business in any way?
So this cocoa butter, there is, of course, because of these equivalent, people see that it is the same. But if you see the cocoa butter equivalent, the functional properties and the structural properties of cocoa butter equivalents are very different. This is why, because these customers they want, because it provides stability, good texture, good finishing lines to the confectionery and chocolates. So that way we see our demand and prices of our products very sustainable in not relation to cocoa butter.
Okay.
So of course it is indirectly related because it is the same alternatives of cocoa butter. It is like cocoa butter equivalent. But if you see the pricing and the demand perspective, it is a bit different from cocoa butter.
Perfect. And another question is on the working capital days. We have seen significant improvement in working capital days. So is there any further room for improvement in working capital days from here?
Or improvement over 97 days.
Yes, sir. We are trying to maximize our working capital cycles as well as the inventory management. So we see in going forward better working capital management.
Perfect, sir. And the third question is on the margin side. Like for the last 2-3 quarters, your margins have been hovering at around 27%. So with improvement in operations, improvement in increase in revenues and operating leverage playing out, so we see this margins improving further from here.
So, sir, as we see, we also already have developed good numbers on the margin. But looking ahead also, we remain very confident in the structural strength of our business model and our ability to sustain healthy margins. And we are very confident that we will be continue to be directed towards consistent profitable growth, which we believe will naturally reflect in the strong margin performance over the time. So the company has been, performing well in terms of top line, the margin in the product mix, and we remain confident and we will be continue to performing like this. We will, keep on updating our investor and shareholders if there are any changes to that.
Perfect. And lastly, have we added new clients in this quarter?
So that is an ongoing process, sir. That is an ongoing process. We are tapping new markets, entering into new geographies, having new clients for our different types of specialty fats and butters. So yes, we are tapping new customers and entering new geographies. It's a continuous process for the company.
Perfect. And 27 guidance you will be sharing only by March, right?
That's right, sir. Yes. So for this year, we have revised our guidance for 1150 plus. So for next year, we will be guiding you in the March quarter.
Perfect. Thank you so much and all the best and wish you all a very happy Diwali.
To you also happy Diwali.
Thank you, sir. Thank you.
Thank you. Our next question is from the line of Shrenik Mehta from Indus Wealth. Please go ahead.
Hi. Thank you for the opportunity. This has been an amazing result, so congratulations to the entire team. I just wanted to understand a little more about your vision for the next couple of years. How do you see the key growth drivers evolving? What are your major opportunities for capturing the market? Just a little bit of color on the long-term vision.
So, of course, our growth is being driven, by a combination of strategic initiatives and favorable industry trends. The key growth drivers we can see for the coming years could be our integration project, which is like backward and forward integration project, which we are coming up. The global expansions and the subsidiary footprint. If you see, we have established 8 subsidiaries globally in the regions like West Africa, Latin America, Brazil. And of course, we are going ahead with the continuous capacity expansions. So those projects are also in terms of that line. And we have certain strategic partnership and memorandum of understandings, like with the government of Burkina Faso, with the government of Chhattisgarh, for setting up our projects on a priority basis. And of course, we are looking for a product and market diversification. We are expanding our product portfolios and penetrating new geographies, which will help us reducing and open up new revenue streams. So these are the growth drivers which we see for our coming years, and we are keeping on expanding our capacities. And this year also, we are expanding our capacity by 30% more, including the backward and forward integration projects.
Excellent.